Hello, dear viewers. Assalamu alaikum. I am present here for discussion of audit and assurance subject. Today, I have also divided my discussion in four parts. That first one is Financial Reporting Act 2015 applicable in Bangladesh. Second one is ISA discussion 520, 530, and 540. Third one is case scenario analysis, EVALY fraud case recently happened in Bangladesh. And fourth one is review of EVALY fraud case in accordance with ISA and IFRS. First one is Financial Reporting Act 2015. In UK, it was Review Council. It was called Review Council established in 1990. In our country, in 2015, we have to follow the act after 2015, and in USA it was enacted, that is called Sarbanes-Oxley Act in 2001. FRA is enacted for transparency and accountability of the auditors. Is the council, the FRC, Financial Reporting Council under FRA, formed under FRA, is to review the auditor's role and ensure the transparency of the auditors in Bangladesh. It's a strong council and it's a standard setting body now, and ICMAB, ICAB, and other government members are in the committee of FRC. It's important to review, or it is formed by the government to give the license of the auditors, enlistment of the auditors, and it has given a section in which public interest entity, that is PIE, should be brought under audit and review of FRC under FRA 2015. What is PIE? Public interest entities. At least revenue is 5 crore in the previous year. Net asset is 3 crore and above. Total liability is 1 crore and above. That is called PIE. It's also can be called that a public entity or government commercial organization or private company may be PIE, or NGO or other commercial organization may be called PIE under this section. Auditor must be enlisted by FRC, and its punishment in the section is 48 is very important. 5 years punishment and 5 lakh taka. 5 lakh is penalty, monetary penalty, and both. So FRA is very important for the auditors, auditing assurance students, all firms practicing and non-practicing members. There is important section is 33, 3 and 3 of 33, that no auditor would sign on the another auditor report or any statement if the auditor is not satisfied his word. That is clear that no auditor is separately exempted from any liability or responsibility if he or they depend on another auditor works. So for giving opinion or issuing any opinion, an auditor must be satisfied himself with himself to rely on his work, not to be dependent on others or any other certificate. That's the important parts of FRA should be learned by the students and also practitioners. It is all. It is also important for final level student, professional level student, and practitioners. Secondly, we are discussing ISA ISA 520 analytical procedures. Auditor may have analytical procedures. It's done at the end of the audit. That is ratio analysis, one of the key audit technique, and simple comparison with industry comparison, year to year or year on year growth on growth basis analysis, related accounts, expenditure, income, and asset liability matching, reasonableness of financial information, expected value, employee cost estimate, trend analysis, okay, a scatter graph, bar graph, pie chart, any other visual representation, time series and a statistical regression, or any other computer assisted audit technique at the end of the audit. Risk assessment technique under 520 ISA 520, interpretation, investigation, and corroboration. That is, and another financial and non-financial factors should be considered by the auditor. This important point is in case of publicly listed company, chairman's statement. Auditor should review the reliability of the information given in the chairman's statement. That is prospective and historical performance analysis given in the chairman's statement. We also work in the with the related in the company's chairman's statement. Always we carefully do this work. Operating and financial review part. That is in the chairman's statement, director's report, and also in the CEO's report should be carefully reviewed by the auditor. Another important ISA is 530 sampling, audit sampling. Sampling is procedure to less than 100% of items within population of the audit work. Population is means entire set of all data is population. So in audit sampling, especially we would stress on procedure, payment procedure, authorization, and if the auditor thinks it lower risks of material statement is exist, the largest sample size may be taken by the auditor or to be considered by the auditor. 545 accounting estimates, auditing accounting estimate and related disclosures. Accounting estimates is always difficult to make judgment on the accounting statement. Allowance for inventory, account receivable, realizable value. Then IFRS 9 under depreciation. Carefully review the depreciation under IS 16. Loss and case lawsuit under IS 37. IS 38 warranty under IS 37. Under IS 38 intangible assets. IFRS 9 all complex financial instrument I will discuss in the later corporate reporting part. IFRS 2 share based payment, Estimation is also estimation. Disposal of any assets under IFRS 5 or IS 16 or IS 40, or this transfer maybe I will also discuss. IFRS 3 business combination, goodwill and another payment should be considered and carefully reviewed by the auditor under IS 5, ISA 540. What should be done by the auditor? Understanding the business, application of financial reporting framework, means by which management identifies the transaction events and condition, how management estimate the accounting estimate. This is most important, how they have done the estimates, review the outcome of the estimates, degree of estimation of uncertainty, assess the financial reporting framework are applied in accounting estimates, appropriate and consistently applied. Management bias, in especially in private companies, the part of management or directors uh, want to give provision or enter the provision by the auditor, or propose the provision to to settle their liability on, and payment may made on behalf of the of them. They will propose, or they can propose the auditor or an accountant to book the expenses on behalf of them. So this should be carefully reviewed and checked all the journals by the auditor. Written representation is the most important under ISA 580. Written representation would help to reduce the auditor's responsibility to a little extent, but not fully. That's the ISA discussion analysis. Then our third one, our case is EVALY fraud case. EVALY was formed for online shopping in 2018. After 2018, it grew heavily or quickly in the market, and it brought reputation to grow faster, to give discount. And they have Mr. Russell arranged the business model to give more discount and discount. That's a motorbike of 1,50,000 is could be discounted at 60,000 or 70,000. They could realize money and book the income in their accounting book. But they, in the meantime, 2 or 3 days or one week, they quick took the money from 2 or 3 buyers and given the discount one first one, and third one and fourth one buyer in the same product couldn't be given delivery. This is the violation of IFRS 15 promise delivery. That is, performance obligation is not satisfied, but they have booked their income in their books of accounts, and this should be called deferred revenue. And discount should not be more than 100%. They have calculated a lot of discounts. If a pen or mobile I can buy, the discount price maybe 5% or 2% or 10% maximum. But they have given discount more than 100%. A principal amount is 10% or 20%. How is it possible? This is absurd business module used by the MD and chairman of EVALY. This is violation of not booking or not booking the real liability or actual liability of the company. And they have done a And another wrong there, that is taking money from older customer and and giving money to the new customer after deferring their day of payment. They thought the cheapest goods will attract the buyers, but chips are nasty. That is a proverb. সস্তার তিন অবস্থা. So people would buy at the discount, and a discount can be given 1 or 2%, but not 100 or 1,000 people for one product. But they have took the advance money from buyers in the name of discount. So this is their fraud and violation of IFRS 15. And another violation is they are they have claimed that they have brand value of more than 5,000 crore. This is absurd, and they are in the fairy tale. This is fairy tale for them. Brand value cannot be internally brand value or internally generated goodwill is not recognized in the books of accounts according to IS 38. This is violation. They have not transacted the actually, but they have raised their income and they have raised their asset in the intangible and showed and submitted the accounts to the government that they have brand value of 5,000. Brand value cannot be booked in the accounts unless it is done in the case of business combination according to IFRS 3. Brand value can be booked in that case in IFRS 3 if the actual payment of goodwill in the buying of another or acquisition of another company, target company. So this is absurd business model. And what we have learned from the EVALY case, that's our fourth discussion. EVALY violated IFRS 15, IS 37, or and they have not followed IS 38 rule that internally general goodwill is not recognized in the books, but they have booked and showed the government that they have above 5,000 crore reputation or brand value. So this is clear violation of IS 38 and IFRS. It is applicable in IFRS 3, but they have not purchased any company or payment has been made to buy any company. So this is absurd and fairy tale. Another is their discount at variable consideration. IFRS 15 paragraph 47 of IFRS 15 variable consideration discount, they have considered more than 100,000% discount from their principal one they did not book fairly in the accounts. This is their violation of IFRS and IS, and also fraudulent activity to the people who have advanced their money for buying goods from them. That's the EVALY case and review analysis. Till our next discussion on audit with any other interesting case, I am saying goodbye and bye for now for next video from me. Thank you.